Hello, Paul Gerard again from Price Accounting Services. This session we're going to talk about D9 gifts and donations. Not a very complicated area of deductibility, but there's a couple of traps I want to bring to your attention and address so that you don't end up with penalties. Okay, gifts and donations. Now, this is a really important feature, so you have to have substantiation. So you need to have a receipt, okay? No receipt, no deduction, okay? Not all gifts are tax deductible. That's a really important message. Now, if the receipt says it's tax deductible, then it's tax deductible. But sometimes it needs to be explored to determine whether there is a deduction. Now, I'm going to use an example of the Red Cross in Australia. Now, the technical way to determine tax deductibility is to go to www.abr.gov.au, the Australian Business Register. That's where all the ABNs, the Australian business numbers, are retained by the tax office and the government. Each ABN will have the relevant record of whether the recipient can accept tax deductible gifts. And so here we have the ABN for the Australian Society of the Red Cross. And the bit we're looking for is this one here. Deductible gift recipient status. And it tells us that as of 1st of July 2000, it is deductible. So tick. Now, the other key message you need to have for these sorts of deductions is, so we've got the receipt, we've got determining its deductible status, but sometimes we need to go a little bit further than that. So, for example, you might attend a charity type event and you might bid for an auction item. That is not tax deductible. So it doesn't matter what you get, what sort of value. You could be being very generous in the nature of giving a gift, but if you receive anything in return, it tarnishes the deduction and it renders it void. And there have been many instances of this noted, so take care with that. The other thing is, this year we're going to be asking some taxpayers to provide us with those receipts if they're large amounts, okay? We're doing that to protect you because it's really important that we check to make sure that they are tax deductible. We do find, particularly overseas aid organisations, for example, the International Committee of the Red Cross, not deductible on the deductible gift recipient list, okay? Other key issues around gifts and donations. Now, here's an important one. You don't have to claim the tax deduction in the year in which it's paid. It's a really unusual and rare issue that I'll argue many tax advisors aren't even aware of. There's a process we can go through to fill out a form to defer the deduction for a gift. So let's say you make a gift in December, fall pregnant, maternity leave, and your income's really low for the year, but you know next year or the year after it's likely to be higher again. We can defer the deduction for up to 5 years for that deduction. So keep that in mind if it's ever relevant for you. It's just a simple form to fill out. So I hope that's helped clear up some confusion about D9 gifts. We'll speak again another time. Till then, bye.